Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on RR. We don't care about the recent crash because of robots. You know, who doesn't want a robot?
Well, that's fantastic. A really smart decision, young man. We can put that checked and it's gone.
Hey, what's up, everybody? Welcome to the Laugh and Stock. Me and Johnny are here today. Just like new time, you know, we're going to see just a little bit later in the day. Maybe it'll help some people be able to tune in because I know the Saturdays were early. It kind of worked out before just based on our lives, but hopefully this time kind of works as well and it works better for everybody else too. And we'll consider adjusting as the future goes on. But how you doing, man?
Yeah, good. Thank you for hosting today. I'm really looking forward to this Saturday stream because you know, a week ago we were curious if we had 20 subscribers by now.
Yeah, that's true. Things have kind of opened up. I don't know what happened on that one video where we got like 1,000 views. I imagine it was just bots or something.
I was gonna ask you how it feels to be viral.
Either that or the people just love us. We can't tell.
Yeah.
But
I know I don't know what happened there, but we have a little bit of bump in the subscriber count. But I know we have some real subscribers too. So thank you for everyone who has subscribed to the channel, and hope everyone who has tuned in will try to use the chat a little bit so we can get a conversation going. That's the point of this stream, right?
yeah, definitely. We want to get people involved, and you know, we were just big fans of. I mean, we talked about this before, and you know, I had just watched that movie, Dumb Money, which the movie itself was okay. It was mediocre in terms of how it actually happened and just retelling of the story, but what do you call it? It was it's just nostalgic. Like I had such a fun time during those like few months leading up to GameStop. I probably got there maybe like a month and a half before it all got nuts. So I kind of watched the rise. I didn't get there too early. I know some people were there like really early on when he first started streaming, but I enjoyed it so much. And when Johnny put forward the idea to do the stream, that's when I was like, yeah, I think it could go somewhere. I think it'll be fun. It's, you know, it also forces you to stay really on top of things. Is like, you know, not that I'm not doing it myself, but when I'm presenting it in front of other people, like it just forces you to really, you know, cross your T's and dot your I's.
Yeah, for sure. And I saw there was some discussion about that big Dumb Money movie, and I agree with you. It was cool to like be taken back in that time, but there were some performances and some shortcomings in the story there, right?
Yeah, like they didn't mention that like Burry was involved, or like, I mean, there was so much more to that story, and they made Arcade just seem like, I said it on Twitter, I like just like uneducated and like just like not well put together. And like I didn't get that impression at all. You want to see something not put together? Go back and watch some of our streams. You know, this is this is us throwing this together. We are not experts at all in video software and recording. So that you want to look for some mistakes, go watch our shorts. That's literally the point of them. Just all us being idiots. So, but yeah, I mean, whatever. It was I guess nostalgic. So that's fun. But
what do you think about robots?
oh, it's the future. You gotta everybody.
Right?
This is not financial advice, but put your whole portfolio in RR. It's gonna bounce back hard.
How is your bounce portfolio, by the way?
I haven't started it. I really need to start that portfolio. If you guys haven't tuned in, my bounce portfolio is going to be Chinese stocks that, like, you know, just start to pop out of nowhere, and then IPOs as soon as they drop and hit a bottom to just invest at the bottom there. And I was thinking of putting like $500 in it and seeing how quickly I can turn it into 10 million. Because I've watched stock after stock just jump from nothing to just these insane highs, like 100 baggers overnight on a stock that goes bankrupt. Like, it's just insane. Like this year, Yell, there was so many of them.
Yeah.
Ebix, yeah, just nonsense in the market, efficient market theory. Just peeking through the dashboard. This is updated, so this is from Friday, which it doesn't look like much is going on. I see shipping's coming back down. I don't know if it's because they're battling the Houthis out there or what.
I saw that too, and pretty big drop there actually.
Yeah, and it looks like the only other thing I see is just looks like Bitcoin might have found a little bit of a bottom. It looks like it's going to trend just above 40. Because I know you said it had dipped last time you looked, right?
The Tesla drop, did you see that?
No, I have to have Tesla in here, don't I?
On Thursday, I think what is her name? Kathy Wood.
Yeah.
She bought in at that dip.
I mean, you know, Tesla's one of those companies that now that there's enough information, you actually have like tangible financials. It's good and bad for it because it starts to eliminate some of the crazy growth schemes, but it also really puts like a true trajectory to the company with financials, so people can really start to like value it properly. You know, obviously there's still a huge growth potential there, and who knows who's going to take the EV market and all that, but we'll see. In the States, they keep talking about a lot of the rental car companies were pretty bullish on buying EVs, and now they're like selling them as quick as they can because just, I guess in terms of people using rental vehicles, that they just don't want them. They're not renting the EVs. They always just want gas. So we'll see. One thing I wanted to just post because I had talked about it, and I think it was Courage brought it up in one of his posts, is just to show you guys kind of what the risk profile is based on my strategy. So I pulled this from Fidelity, and it made me laugh because I think it's pretty hysterical. But this is in my portfolio. This is the risk that I'm taking on. So here's my account, which says my risk is somewhere at about 430%. Well, I don't even know what that's. It's just the standard deviation from the norm, I guess. Where these are like the S&P and stuff down here. But I would like to point out that my return is much better. So you gotta shoot for the risky ones to get the outside returns. So it's just trying to show that like the strategy can work. You do take on a ton of risk. So I understand this is not for everybody. Like seriously, you can't just buy these companies that we're talking about because this could just as easily be just as far. It could be minus 50% too. So until you really know what you're doing, or you have extra money, like this is an extra money account that I'm doing this with. This isn't, like I said, I have multiple portfolios, but just to show you too, this has been the portfolio's return, and this is like the daily one, but life of data here. You can see since December 10th of 2020, I do have a 50% return on average. So that's a yearly one there. I mean, this year to date here has been huge. Obviously, the past few companies I've had have been kind of home runs, but But it's also, this is, I would say over the last year was really when Johnny and I got pretty serious about using the spreadsheets and really, working on the strategy. So I just wanted to pull it up to just to show that like I'm not lying about the kind of returns that I have been getting, and just setting my stop loss and things is how I manage that risk. But once again, just to be completely clear with our disclaimer that the strategy that I'm using and that Johnny's using is very risky. And definitely speak with a real financial advisor before you make any kind of investment decisions. Do not invest in just what we're saying. This is purely educational and entertainment, really. So.
Yeah. And I just have to agree. I have a similar thing in my brokerage, and they rate your portfolio like from, you can have a negative rating, but you can also get like a 1 star. That's it's a positive risk profile. Up to 3, so 3 is like a good one, but I don't have a start, so that means also mine is, we do the same strategy, so of course mine is also has the same risk, but I think it's manageable if you, especially when we have talked a bit lately that we use the charts also, and that we look for those double bottoms, and then we use also stop loss. It's to protect ourselves, of course, but it's never cool to lose 10%. But when we buy, we often, at least I can say this for myself, that often you get a quick gain, and then maybe it takes a little bit before it goes up again, but you pretty quickly with the strategy we use starts like on a positive note. So that's my experience, at least.
Yeah, no, definitely. And obviously I re-entered into BNED and took kind of the wash sale, but I'm okay with that. I still, and this is the thing, even though Johnny was just talking about technical analysis, we start with fundamentals. We are value investors, through and through first, and the charts just kind of come in as like a last add-in, I guess, to the whole analysis. So we
like you track them to see maybe for that double bottom, that you let them go up a bit first, and then see if they get a pullback, and then you enter, and then it means that you have tracked them for a while based on the fundamentals.
Yeah, I mean, it's a mix of that and understanding, obviously, the business and then the narrative and what their future guidance is. It's all those things kind of in tandem that lead to an actual investment from us. So, we're using historical valuation to kind of notice when we're getting, usually these companies look almost bankrupt, or they have to restructure, or they're finally turning around. They're either changing their business profile, or they're cyclical and just kind of coming back into the better part of a cycle. So until you understand those things about the business, the technical analysis to me doesn't really mean anything. It's only using that on top of thinking that, like, okay, this is already has everything else going for it. I'm just waiting for that, and I get it. You can't time the bottom, which is also why we both always say, like, we tranche in and out of these things. It's not like I just take a position and that's my full position. I definitely enter a position a little quicker than I exit. Exiting is a very slow process. That's partly how I manage not selling out too early, because usually once these start to run, it's kind of a guaranteed that the thesis is correct at that point, because if I've already had a 50% return, we were most likely right about whatever we were assuming, and usually at that point there's a news story or something else that comes out that causes almost an immediate spike, kind of proving what we thought or were hoping for with the companies. And then anytime obviously it doesn't work out, that's why we set the stop losses. So just to be transparent about the strategy. And then, as we always say too, I just like to keep reminding people, if you guys are ever interested in learning about the spreadsheets or that kind of, or the education side of finance, we would definitely do a stream kind of on the side or something like that to go over that kind of stuff. I mean, you can look at some of the intro videos, but I have a few companies, Johnny, from the Wednesday and Thursday stuff that I wanted to go through. Only 2 left. And then and then I can update from Friday, and we can go through all those if you want.
Sounds good. Sounds good.
All right. Did you have anything left over that you wanted to look at?
No, I pulled up the same as you have, and then I just quickly had a look on the daily, and I found GSIT, so I just pulled them up. But I have never seen them before, so that would be a new company, and also Big Lots and EMKR.
Okay, I've looked at. I don't know about GIST. I have to double check that one, but the other two I've looked at. But yeah, I've followed GLT. I've invested in GLT before, and they've been historically just kind of knocked out of things just because they had a lot of business in Ukraine. So obviously with the war going on, that's not worked out well for them. So we'll go through that, and part of the reason I pulled it up is I can't remember if it was the chart or something. Something had changed on it, so we'll see. It looks like it had bottomed out, and it looked what is this? About $1.25, 30, whatever it is, 35, I guess is where it really is. So I probably just wanted to peek at it again to see if anything's changed with the earnings. I don't know if there was a recent report, because like I said, I haven't looked at them in a second. Sometimes you can see this is from 9:30, so my share radar data is not totally updated just yet. It's obviously a very leveraged company. It's a historically old company. It's been around for a long time. It deals with all kinds of paper product supplies, more like consumer defensive type stuff. So they offer solutions across tea, single-serve coffee, filtration, personal hygiene, diverse packaging, home improvement, industrial applications, just all kinds of stuff, wall covering base material, composite laminate papers, technical specialties, including substrates for electrical application and metallized products. So not just paper products, but, all kinds of like stuff that you use just in bulk almost. There was a large purchase earlier in the year, but I don't remember who the insider was. It's a 10%er, Carlson Capital. So they've been buying all the way down, basically. They own 14 million shares.
Yeah.
So, that's a huge...
Their biggest buy was at $3.
Yeah, and it's not even that, we're that crazy off from there. So, I don't know why it's not pulling up. I gotta pull this out and get this over here.
Are they value firm?
That's a good question. I'm sure I looked at them before, but I don't remember offhand. But you can see where this historically trades, guys. This historically trades it, in the teens. This is a 5-year chart, a 10-year chart. So, this business, pretty much since the war and kind of towards the end of COVID, that's where it really fell off. So, obviously, a huge catalyst for this would be that the war ends. Now, I think I talked about this quickly last time, but obviously, there's going to be a lot of rebuilding that's going to have to be done in Ukraine. I'm sure that country is relatively devastated from everything that's happened. But I just want to see if anybody had talked about it. Sorry, what were you saying?
No, I pulled this up on Thursday. I don't remember why it caught my eye, but I think it was because it has get a bit hammered in the past weeks that it's down. And because I have also tracked it for a while, and so I found it in my tracker at the bottom. Because I didn't find any news, if I remember correctly. And there was a lot of talk about how impacted they have been from the war, like you just said. So they are not in a really good position right now, but I remember when I first saw this company, it has some interesting things, obviously, that's why it's in the tracker, but yeah, I'm not sure. It's very hard to say anything about that war, and how long, it can last for many more years, and I'm not sure about how they can move on from that.
Yeah, I don't know. If you can see, there's a huge dip in revenues, and revenues are back up right now, but obviously the cost and the margins aren't great. So, I mean, it had slightly positive. I don't know. It's probably adjusted EBITDA, so who knows if you can even really go off that. Obviously, cash flow or net income. This one's net income. Cash flow is below. It's kind of been rough recently, and doing some acquisitions too. But obviously, it hasn't quite panned out. That's probably actually where the asset or the revenues and asset increases come from. But they do have a lot of debt. So the issue is this one's going to continue to trend down. I think that's why I kind of was checking the chart, because I picture this to probably keep going pretty low. My valuation calculator brings it to $1.27, which it was like 130 was about the low. So and that's my high side right now is the $1.27. So I typically look for a discount from that. You can see it's pretty highly levered. So I really think that this is going to be a story to kind of keep an eye on. And until that war ends, and even if the war does end, that doesn't immediately become bullish for the stock, because who knows how much they're going to be able to return from the pre-war.
Yeah, it can be too damaged already. But what I will say is I think they have halted the dividend, because historically they have paid out a dividend, and I don't have anything for 2023.
Yeah, I'm pretty sure they canceled it.
They have halted it now, and I also saw they had sold off some assets in Europe. I think it was in Germany or something. So I guess you can say that management are really trying, and maybe they are like
desperate.
I kind of what I just said, you know, the management and what they are doing, but there's still a lot of things that needs to be solved there.
Right. No, I agree. But I definitely think it looks a little desperate right now. So it's tough. But I think I had just seen that had kind of bounced back up, and it was creeping back up, which is probably more just on technicals, more so than anything actually changing in the stock. I just wanted to check one more thing, just see if news popped up anywhere about anything. I don't know why my stuff keeps popping open over on the right side. It's driving me crazy. Like, go into, where's my other?
Valuation 127.
Yeah, $1.27. And when I'm saying that, for if anyone hasn't tuned in, my valuation's like a pretty rough estimate. It doesn't really mean all that much. It's just something I kind of use to help delever some of the companies we look at, because and the idea was from RK. I don't know if I do it exactly quite like he does, but I know it's pretty close, and I get kind of the idea what he was doing. Just trying to, eliminate some debt on the balance sheet, which by issuing shares at a discounted rate to the current share price. So obviously it goes up and down too as the price moves, so it's not 100% accurate, but it historically actually it does trend pretty close to I would say like the center of a mean for most companies. And I attach into it cash flow from operations, which I think is important just because it kind of shows you in the future, based on how it's currently historically earning, that or at least getting its cash flows, that it's going up or down. And then from there, you have to take into account, what's CapEx, what's the actual like free cash flow, and then how much does that actually transition into earnings, and then what does management do to return that value back to the shareholders? It's kind of that trifecta that needs to occur for it to mean really anything, for it to actually materialize.
Yeah.
But yeah, I don't think I have too much else to say about this one.
No, and I quickly had a look at the Carlson Capital, and I think they are a hedge fund.
Yeah, I'm just gonna adjust my numbers here just from last time, because I'm kind of cool with $1.27 being a current valuation.
If it goes down to 127, the market cap starts to be very small here.
Yeah, and that's another thing. Like, Johnny and I are looking at like really small companies sometimes, and I'm sure the risk tolerance is just kind of insane for some people. But, we're small enough investors that, even if something's not, there is a problem sometimes with illiquidity in some of these companies, which if something really has like a really low volume, which is kind of why I look for some kind of event to occur usually with these things. I mean, sometimes I can just find something that looks like it's just a good price. Like, have you looked at PBF Energy recently?
Yeah, I have them in tracker.
Yeah, and that to me is just trading just stupidly cheap, and there's not really like a news story to me that will change that, but I just can't believe on metrics that doesn't trade higher. I'm considering adding it to one of my other portfolios where I take on longer term holds with companies, because right now it just looks insanely undervalued, and management seems to be doing like everything to try and increase the stock price, and it just hasn't really quite materialized yet, which is just honestly surprising, because I've seen a lot worse companies get their share price to be overrepresented by what the management's doing.
Yeah.
So next one, guys, is Sleep Number. If you guys, I'm assuming most people know what Sleep Number is. They're they're the kind of beds that or they're not only the beds but the mattresses, and I believe they sell some other stuff too. But they're the ones that adjustable, and both sides can be different. You can change your number so to comfortable from not comfortable. I guess the soft to not to hard, right? I guess with your mattress preference, right? Have you heard of these? Do you hear these over in Europe?
I've not heard about the company, but I know what you're talking about with beds, that you can turn the mattress around and it's a bit harder.
Well, it's like a number. They're like electronic, and you can like press a button and it like firms the mattress up. Or
Okay, no, I haven't. Then I haven't. My bed is pretty normal.
yeah, no, I'm the same. Actually, I mean I have a Tempur-Pedic, but my in-laws, I have a Sleep Number, and they really like it. So I mean, there's one person I know, in real life that has it, that likes the bed.
Yeah, but that's pretty cool though. I've actually not heard about it.
Yeah, I wonder. In Europe, how do you guys do your sizing for beds?
In meters, I guess.
Because in the States, it's considered like a double, a full, queen, king.
Oh yeah, we have the queen, and we have the same, but we have the same.
Okay. I wasn't sure if you guys did something different.
No, we have the same, but also it's like if you have 2 times 2, that's a king, I guess.
Yeah. So just looking real quickly here at Sleep Number, guys. Interesting, because they're buying a ton of shares back. So they are reducing the equity, but at the same time, their debt is skyrocketing. They have a ton due in short term, so I got to see what's going on with that, because they don't carry cash on themselves usually. So this is really levered. This is actually surprisingly levered.
You don't see that so often, that high of a short-term debt, and then they don't have the cash. But if you look at the historical earnings, it's pretty impressive, to be honest.
Yeah, but that's just because they're taking on debt.
Yeah.
Like, I don't know. I mean, if you look at like book value is ugly.
Book value was very ugly.
So, and I definitely want to look at what their inventory is, because it looks like their turnover and stuff has really dropped off. This year's been definitely tough for them. Or 2023 at least was. Anybody own this? Oh my gosh, what's going on here? Stadium Capital has a huge investment in it.
I'm just trying to read a little bit about the debt here.
Man, these guys are concentrated. How many holdings does this company have? Yeah, not many. just trying to get an idea of what kind of companies these guys invest in. I mean, I've looked at a lot of those businesses, so they're definitely more in kind of more unproven company models. I'm actually surprised though. I didn't realize that Sleep Number was in such a rough spot right now. I had just looked at Purple. I did it kind of in between the streams, so I didn't do that one live. And they're somewhat interesting, but I mean, they're also not in like a great position. They're restructuring their debt, and
Yeah, I think it's a little bit tough because you look at a few things and you think, oh, that's good, but then it's hard to get past that debt. And I mean, the book value is. Do you have a negative book value? Or?
yeah, I do. Very negative.
And also in 2023, the cash generation has been awful, and I see it's a 12% short interest, and I can understand a little bit why, you know.
Oh, it's got 12% short interest, huh?
Yeah.
That's good to know. So their entire liability is a revolving credit loan that's due. Is that what's going on here?
Yeah, and they have actually increased it a little bit from the past year also. But if you look at notes to financial statements, they have something on the leases too, and I can't really understand. That's also a high number there. I didn't see it in the balance sheet.
Well, it must be just most of their things are leased.
Oh no, I just missed it. I see it now.
Yeah, it's just a company's mall-based retail stores lease may require payments of variable rent based on net sales in excess of certain thresholds. Blah, blah, blah. Because that was one thing that was interesting about Purple, and I don't know how much these guys do it, but they shop, direct to customer. They have wholesale, so they kind of mix the way that they're selling mattresses. Because certain time, it looks like, I don't know if it's cyclical or if it's just more of a general trend, but people tend to either buy more at wholesale or they tend to ship more direct to their house. Whatever, e-com I think was down for them recently. This doesn't really say anything.
Section about the stock-based compensation.
I didn't. Why do they have a lot?
No, that's what I was going to ask you. If you think it's a lot, and it's also it seems to me that they have decreased it a bit. So maybe that's a little bit of a good sign.
Yeah, I mean, I have 9 months ended that the stock-based compensation on here is a little up. But yeah, I gotta figure out why.
Oh yeah, it is. I was reading this wrong, but it is up, yeah. So that's not necessarily too good either. When they are in such a bad spot now.
I mean, they got a 8.2% interest rate, so that's tough. And they got, but they can borrow up to, what was it? Allows the company to increase the amount of credit facility from $825 million to $1.2 billion. So they can take a lot out if they need it. They have $488 million. So does this have a maturity date? Like, does this end at a certain time? Because I don't really think that's actually like short-term due, which makes a big difference. It's just the interest, obviously, they have to pay. Or unless they broke a covenant, and that's why it's appearing in the current.
I think 2026.
Oh, yeah, 26. Yeah, I just saw that when you said that.
Yeah. Well, what do you think about that? That they have increased that debt also, and.
I don't know. It doesn't bode well. That's why I'm so confused, because it seems somewhat risky to continue to take on too much debt. If you're, I mean, I get it. They're buying shares back, and it looks like it's slowed down a little bit now. But to take on all that debt, and maybe, I guess this is actually kind of when the share count stopped, so then they took on the debt to be able to keep running the business. But something's going to need to turn around here.
I'm checking seeking alpha.
Yeah, same. I just pulled them out too. We're on the same wavelength here.
Like this, I'm just skimming, but it doesn't look like they are very confident, but just a bit careful.
I mean, this guy is saying he thinks it's in... He said he's got a margin of safety at this level. What was the price during this?
15.
Yikes.
It's down on
Way to be off. I mean, who knows? You know, I mean, obviously this guy sounds like he's probably investing more in a long-term idea, not so quickly. So
That's a good looking picture, though.
that's what's important. I mean, their gross profit per mattress is slowly going up, but or he's saying total assets over the past 8 years grew at 11% CAGR, but however, gross profits didn't grow proportionally, and it's leading to a decline in gross profitability.
Yeah. I'm trying to get to his conclusion here. Have you seen this guy before?
I don't think I have actually, but I mean, not that this isn't. I mean, he definitely does like a discount cash flow idea here, but he's using Demoterin, so he obviously knows. He's calculating it correctly. I tend to agree with the way Demoterin. Like I said, I'm still going through his valuation book right now, but it makes sense using risk-free rates and premium rates to figure out, and then taking the debt into account. And it's definitely an interesting read if you're a complete nerd.
Yeah.
Most people, it's a little dense, but
I've tried a few times, and it's a bit hard to follow for me who doesn't speak English as the first language, but I understand the basic of his teaching, but when he starts to go in depth, it gets a bit over my head, but I need to improve on those things. I'm just looking at he's right in the bottom here, like given a ball, I would rate SNBR as a company with average fundamentals rather than a wonderful company. It's a bit what we saw also, right?
yeah.
And maybe last year a bit below that.
Yeah, I mean, if they're able to, obviously they're not going to pay off the what was it, a revolver? Is that what we said their loan was? I don't even remember now. But either way, hold on, this is the one I'm trying to get rid of. I got so many stupid tabs open here. I'm just trying to find the right one. Because, I mean, the credit facility, if they could just kind of keep restructuring this, and if they can keep the interest rate low, then the debt doesn't really count against them. So that book value here it was obviously distorted, and this is, I can see why he would say, if you're looking at it like that, it's undervalued. But my thing is, the cash flow this year, especially from operations, was poor of the trailing 12 months. Before that, it was fantastic, but right now it doesn't look great. So if it keeps trending in this direction, I'd start to agree more with my valuation calculator that this is on a downturn. I mean, this was $41 not that long ago.
And 4% ownership, and I'm I'm looking at the insiders. There have been very limited buy. There was one in 2022.
Yeah, I feel like insiders would definitely be something to look at. I mean, I don't know if I see too much here. I'm not saying that guy's right or wrong, but I just don't see enough right off the rip to think that this is enough of a return for me.
I agree. And if you also look at the chart and then maybe the lack of inside buys, it's like they have had some opportunities to get in, but I guess when they keep buying back shares, maybe that's like the priority instead.
Yeah. I would like them to continue to work on the actual business, though, and figure that out.
Yeah.
Yeah, I think you got anything else you want to check out on them? I mean,
No, I think this is not something that would go into my tracker.
yeah, I mean, I always obviously add it to the database, but and maybe it's just cyclically not going to be a great year for this kind of thing, because it looked like Purple, when I looked at those two, were kind of historically struggling. So, but if they're not generating cash flow, then the credit agreement starts to become more concerning.
Yeah.
And I don't know if they're expanding through CapEx much or what, but I don't think they are, because this doesn't look like it's that crazy of a CapEx. But, you know, like he was saying, if they're not growing, then it's how much are they making on their margins, and it looks like the overall mattress sales are down. So even though they've actually increased the margin per mattress, they're selling less mattresses, so it looks worse.
Yeah. And has there been some changes in management here? Because if you look at the numbers up till leading up to the pandemic, it's great. You know, it looks great.
Yeah. Yeah, look at this. I just noticed there's a news article. It's like Sleep Numbers plummets 29% on Q3 results and store closings. So, I mean, maybe that's what management needs to do, is get rid of some of their weaker stores too, but is this the one these guys were saying?
If I would add these to the tracker, those are the things I would have to pay attention to here, like management doing something, showing something more than just buybacks, because the buybacks is great, but they also take on debt, so I don't know.
Yeah, but also, I mean, I didn't get to. It looks like they were buying back those shares, which maybe, you know, the stock was worth more back then, so that money wasn't necessarily spent great. You know what I mean?
No. Yeah.
And I was just reading that someone was saying that, you know, by them increasing the cost of the mattresses, the problem is they're selling less, so that increase in cost, you would hope that it would benefit the company, but it actually hasn't. It's hurt them. You know, they're selling less mattresses now as if they're almost too expensive.
Yeah. And if you go through the news section in Thinking Alpha, it's like quarter after quarter, just they miss.
Yeah, and that's what I'm saying too. Looking at even our data, the trailing 12 months looks ugly. I get it. There's earnings, but earnings only means so much to me, to be honest. Earnings are so easily, you know, kind of miscued.
If you look at retained earnings, it's very bad.
Yeah, retained earnings are more important, if you ask me. Like that's more of a measurement here. And look at this. I mean, you look at, it's like literally inverted itself. You know, it went from positive 55, we're at minus 45, minus 50, minus 47.
Yeah.
So, I mean, it's probably a little skewed from the buybacks, but at the same time too, it's made things worse. Not, but I guess it depends on what they do with the actual debt and how much they're able to repay that credit. You know. All right, so I'm going to head back to my dashboard real quick. Let me just disable this. I'm just going to delete these two from my checkboxes, and then once that's done, this macro takes a little bit just to run through to wipe out the checkboxes. But once that's done, I'll refresh everything, and we can start looking at the stuff from Friday, see what we can find.
Yeah. We can maybe talk about BNED meanwhile. what did you think about this week?
I mean, I think it's. I don't know if it's going to get much lower than here. I think it ended the Friday at like 91 or 92, somewhere in there. So obviously I'm still down on it. So, but I don't think much has changed. If anything, I've talked to quite a few people about the thesis and where I think it lands. And one thing I wanted to calculate, because if you look at BNED real quick, let me just jump in here real quick. Man, there's a lot of comments on this article already. Yeah. Okay, so Jay Yoon had said the FTC participation rates fall to 30s when an opt-out model is used versus the 82% participation rate in an opt-out model. So one thing I was thinking about, and obviously this would be kind of best worst case scenario, is they're talking about that they have possibly like 700 colleges that they could implement the FTC model into. Now, let's say it did change to an opt-in versus an opt-out form. I'd have to obviously do the math here, but if it dropped to, let's say, in the 30% in terms of the opt-in rate, let's say the news came out, it was the bearish form, and the Department of Education, in my opinion, makes the wrong move, ends up changing it to an opt-in model. And I say that because I think it's going to end up costing more money. It's shown that the schools continue to increase at the 6%, when they're allowed to, and no one's able to kind of help out the students. They just end up paying more in the long run. But if it does drop to 30%, but my math in my head is I think they're in like 240 or so schools right now. Their goal is to get into like 500 or something like that by 2026, I think it was. If you're able to, for instance, triple the amount of schools you're in, and you go down to 30% in terms of your opt-in rate, you still have enough people opting in based on the amount of schools now that you're in that you would still be free cash flow positive. And if you're free cash flow positive, you're still slowly benefiting from this. Yeah, it's not quite as great, and it wouldn't be as large of a return in the long run. But in terms of having to restructure, if you just do the simple math of, okay, I'm down to 30%, but I'm in 3 times as many schools, nothing's really changed. That's like a break-even point. And then we would still be generating free cash flow like we did, this last quarter with them. So that would still lead them to generating revenue, which means they could slowly pay the debt down, and that money would be returned to shareholders.
Yeah. And did you see that government article from BLCM there? Because I pulled it off, not on a stream, but I pulled it off off camera, and it's interesting, right?
Yeah, no, that's the one I pulled up on my stream at some point. And this is the one that's like the addended version of what they wanted to present to the Department of Education, because this is where the law, this section here is what they would change in the law. Now, this is a form of keeping it as an opt-in and just being extremely transparent on what the savings are to people, the fact that you can still choose. You can still choose to rent the books, buy the books, digitally rent, digitally buy, which means you can sell them back in the future if you want. Because I think that's a big thing with students, is that, not only do you want to get a good deal on these books, but you do want the option to have to, if you want to sell back the books. I think that's a lot. I know it's kind of BS because they don't really give you much back. Everyone's like, oh, if I can't sell my books back, like I would never do that. Well, at the same time, and you could rent too, really, if you're trying to save money. At the same time, the amount of money that they give you, you could go buy a textbook for $100 and then you bring it back and they're like, yeah, I'll give you $10, so it's like, oh, great, thanks. And a lot of those books don't even resell great, because that's the thing, is these schools, they make a new edition every year, and it's like impossible to follow along because they just change the edition. Like, colleges are, a for-profit business, really. I mean, I know in other countries they're not, but in the United States, a lot of private colleges are for-profit. Whether they want to say that or not, they're trying to make money. And one of the ways they do it is they increase the charge of books and all the excess things, and kind of BNED and Core and some of the other companies that are using this model, they're kind of the ones that are buying now the bulk of the material and not allowing the schools to just kind of go unchecked. Because that's the interesting thing is if they go to an opt-in model, once again, you go back to when the reason why the Obama administration put it in was because the schools were unchecked and they were increasing at this 6% that they mentioned right here. Prior to the growth, I've read this one now, a few times, but prior to the growth of affordable access programs, course materials purchasing was by and large effectively opt-in, putting the responsibility on students to find and purchase their own materials, and these retail prices increased at a rate of 6%. So it's not beneficial to the students to have the opt-in model. I get why people, and it seems immediately like that would be beneficial, but really the programs where they buy these books in bulk and guarantee that a bunch of students are going to buy them, it actually brings the cost down. So I really think that's like super important for people to recognize. I think if you present that to the Department of Education, that should throw a bunch of red flags that they should not do an opt-in model. It will not necessarily benefit the students like that one first group was hoping it would.
And let's say they do it anyways. Do you see it as, I know we have talked about this before, but do you see it as a very big issue? Even it's almost 50% on that news, right?
Yeah, but that's because I don't think people have looked into it. Sorry, my daughter's like screaming out in the backyard. But what do you call it? Yeah, that's what I'm saying. I don't think people have looked into it. They haven't done the simple math. It's not. It doesn't take that much to look into it and see why it's going to be. I don't think the news. I don't think the news was that devastating to the company, and it really tanked the stock price. But the other bullish thing, and this is another thing Courage brought up in his article, is look right before the stock price crashed and that news came out, which the news just said it could materially change. If on an opt-in model, how much the company can make, which yes, I get that that's true, but they had price targets of $3 and $4. So if those price targets stay true and this news is overblown, this could go back up to $3 or $4, and we're trending under $1 right now. I mean, you're talking a guaranteed 3 to 4 bagger. So I don't know. That's why I said the upside to me seems relatively reasonable. I think it's. I'm just interested to see when some of like these preliminary hearings are, and when an appeal process will be to the Department of Education to make sure that nothing like this actually gets written into law. And then on top of that too, I want to see what the next quarter of earnings are, how they perform for the spring semester. I want to see what the numbers are for that. And then right now they already have contracts with a bunch of schools to add in for 24 and 25. Which is why I said even if we did go to an opt-in model, they're still going to keep implementing this program into schools. And, even if the margins stay the same, if they're getting more students involved, if they're getting more schools involved, yes, each school will get more students to opt in, but you're increasing the amount of schools, which means that it will kind of balance out. I mean, it's not obviously that easy to just do that math and also to predict what will happen in the future. But I brought this other point up too. I think, if you're a freshman and you're coming into college for the first time, and you've taken 5 classes, you don't know anything about what you're doing, you don't know where you're going, and they're super transparent when you come in and say, hey, when you're just so you know, after you sign up for your classes, if you want, select this option and all your books and everything will be done for you. I picture a lot of freshmen taking that option just because people are going to be like, yeah, I don't know what the heck I'm doing. I just want my books and I want them already done for me. And if they're very obvious that it's cost savings for the students, then yeah, that to me it's an obvious buy at that point.
Yeah, and also time saving. If you can get everything sent home, I would assume that if people start to explain each other how this works at the campuses, where if someone doesn't know about it, they would be interested to use it straight away, right? If you hear how the explanation is.
Yeah, and the return rate from freshmen to sophomores is high, so obviously people like the program, and I get it. It might not make sense for every student, which is why the opt-out model is fine. If it doesn't make sense for you, that's fine. But for most students, it would make sense. So, I get it. Having the choice is great, but if by having the choice, it's going to cost the average student more, it's one of those things that like it's tough to see until it's in practice and it proves that it saves money, and it has proven that. So we'll see where it goes from here, but.
Yeah.
Um,
Also in it now, so just want to mention it. I know we have mentioned it on the individual streams, but both have taken a position again now, so we are both in the email.
Yep. Yeah.
And I see NASCAR is in the chat.
Hey, what's up, NASCAR? How are you, man?
He's writing CRBP is a healthcare stock that was priced relatively strong. It had a push to $40 yesterday, one of the clean runs of 2024.
He said CRBP.
CRBP, yeah.
Yeah, that's the biggest daily mover.
Yeah.
And what was the news on this? I mean, this was definitely a interesting chart. Man, look at this. If you had bought this in this is March of last year, you could have got it for $1. How old are they? They've been around for this long and they have zero revenue still?
Early phase 1 data for tumor candidate. That was the news.
Yeah, I mean this might already be baked into the stock price then, because they're just saying the test results from the trial came back good.
Yeah.
But this was why I was saying before NASCAR, you know, it's hard to find these things and actually predict which ones are going to be successful. I get it if you're just trading it on momentum, but other than that, that's why biotech it's tough for me. It's tough for me to follow some of these guys.
But nice if you traded that one.
Yeah, I mean that's why I say, you know, if you're able to be a momentum trader and it works for you, I mean it's extremely successful. There's obviously a bunch of YouTubers who are successful at it. I just don't have the stomach for that kind of investing.
No. And by the way, NASCAR, I checked out was it Warrior Trader his name was on YouTube? He seems to know his stuff.
Yeah, Warrior Trader is the one that my friend recommended me too. And he's just skimming stuff. You know, he looks for pretty easy momentum stocks and just trims. He's smart. He doesn't take super large positions, so he can kind of get in and out quickly. And he's not looking for gigantic returns sometimes. You know, like he's okay with just skimming like 5 cents, because if you buy 10,000 shares and you get 5 cents, you know, it's a decent little return. He's kind of doing that over time.
Yeah. Yeah, a bit different than our side, but crazy to see that kind of spike.
Yeah, no, it's definitely interesting. It's cool to watch.
What's next, Dave?
Well, I'm going through the daily movers right now. So these are all things that have moved over 10%. You know, I don't feel like I need to necessarily go over which ones I'm looking for, just because I have gone over it so many streams in a row. You know, if anyone's watching the streams, I don't want to like bore the hell out of them. But do you have any tickers that you've already? Which ones did you say you already pulled up?
Well, I have EMKR.
Encore, right?
Yeah.
Yeah, it's been a minute since I looked at them, but I can pull them up again.
Yeah, I know we have seen them before.
Man, EVA keeps going up.
And then
Oh no, they went down. That's what it was.
I found GSIT, but I pulled them
Gotcha. Let's see. Yeah, I'm not finding so much for the daily movers per se.
No. I had a short list on the daily from yesterday. It wasn't too much moving, but I couldn't really find so much interest in the weekly either.
Yeah, I'm pulling DAIO. They're trending pretty low right now, and they're starting to gain some revenue. So I'll take a peek at them.
I saw PDF is in my weekly 13% in a week.
They look really good.
Yeah.
That's definitely an interesting company to me.
Yeah.
Their numbers are insane, and the way they're treating shareholders is like perfect. Like they're doing everything that you could want with shareholders. So they're kind of making me want to be one.
Yeah.
Wow, Zedge. I haven't looked at Zedge in a minute. You ever looked at Zedge? They're like an app company. It's like phone backgrounds and stuff. So I'm always surprised on how successful they are. But like you can go on there. I guess it's kind of like NFTs in a way, which is kind of what scared me away from it. But you can go on there and make like your own backgrounds, and you can literally go on there and sell them to other people. So if you're an artist and you want to come up with different things, you can go on there and have people download them. A lot of it's just obviously ads on the app. Which that was another big complaint I saw with Zedge, is people were complaining that like when you go on the app, the ads are just like kind of obnoxious.
Okay. Yeah, I actually have them in the tracker, but I am missing some data on them. I don't know what's going on, so I haven't checked them out for a while.
Gotcha. Yeah, not too much here. I'm gonna go to the loses. See what's.
PON up again?
I didn't notice it when I was scrolling through, but yeah, Pole's been pretty bullish for a while, hasn't it?
Yeah.
It always amazes me how many companies have zero revenues. Like if you're gonna go public, I get it. You know, you got to start somewhere, and some of these companies are really small, but to just not even have any revenues, it's always kind of crazy to me. I get it. Some companies can you got to get that initial funding just to get started, which is most of the healthcare and biotech, but and a lot of the tech stuff. But at the same time too, it's tough to invest in that market when you really don't have anything to go on besides a narrative.
And I saw my, I have a love-hate relationship to SNBR.
Yeah, what's going on over there?
Just keeps going up. It's at 440 now almost.
Ugh. No, that was a compelling one. I missed out on that one. That was a good call by you.
I just wish I didn't sell. But I have to say, I stuck to my plan. I was seeing like $2.
Yeah.
And I went out and.
Yeah, that's why I said my thing now is as I get to my fair value or whatever I consider, like a reasonable value for things, I start to trunch out there. That way, if it continues to climb, as it climbs out, I can capture a big chunk of that movement without feeling like I missed a ton of it, And then also, too, if it really is close to fair value and it starts to revert down, I can sell out that way and also still continue to get most of the gain that I acquired, too. So it's a little bit back and forth, but so far it's been working because kind of like RK said, you kind of drag your feet, and that seems to work out well as opposed to just getting out. Because usually, like I said, if it's a winner and the thesis is right, it's probably going to go quite a bit higher than even where you and I are pricing it for.
Yeah.
Because then the growth guys get in, you get the technical guys coming in. You know, they're a little bit later to the party, but so is the way.
You just gotta be happy when you get some gains. I think like we are not the first companies that sell too early or buy too early, you know.
Yeah, I'm usually pretty happy with the gains.
Yeah.
It's usually not very disappointing. Usually that's a good thing.
It's a good day.
Yeah, like I said, I just keep slowly trunching out of Adherent, and man, that thing just keeps going up. And then there was advanced emissions too, that's still going up. I almost trimmed a little too quick on advanced, but
yeah. No, I saw them. They had a good week, I think. That was another one from Courage, right? He even had a podcast on Seeking Alpha, I think, about those.
I don't think he had one on Adherent. I think advanced emissions. I think he was on.
Yeah.
You know, Intel is down 12%. That's an interesting one. That it just hasn't been able to trade up like Nvidia and AMD. You know, of like those tech companies and the future of AI. I'm always surprised that one's kind of trailed off and not be able to keep up.
Did they show up in your daily or?
Yeah, daily losers. They were down 12%. I think they had weak earnings or something.
Oh yeah, there I see them. And Save is down another 13%.
Man, you see Rail Vision? You want to talk momentum?
Oh yeah.
What did you say? Save? Spirit?
I remember Save, the airline.
Yeah, no, I mean, you know, that's the same thing too. Is obviously the deal fell through, and then people are trying to scramble and figure out, you know, valuation wise where that stands. It doesn't look good to me. I look at it; it looks like it's going to go bankrupt without some other kind of thing coming in, and just the fact that it already got shot down once to get bought out. Like no one's going to try and buy it. Like, you know what I mean? Like it's why go through that whole process knowing that most likely you're going to get shot down. They just got shot down before, and I don't know. I don't think they're gonna make it.
No, I think I would take the loss in that one if I was in it before the drop.
Yeah, I'm seeing everything in the weekly movers look like it's just a little too pricey for me. I'm not seeing too much in here.
No, I agree. I saw this in it's a bit. I think the couple of first week in January was there was a lot to look at, but seems a bit more slow this week.
Yeah, I mean, you're going to see stuff start to keep creeping up. Like I said, the inflation data for the states came out, at least the core inflation, which is, like I was telling you, it's like the government's preferred way of looking at it. And on a 3 and 6 month basis, it's below 2%. So we'll have to see what that actually ends up doing, but it's pretty bullish for stocks.
Yeah.
Especially some of the more leveraged stuff that we're looking at, because that's another thing too. Is you know, the big thing with BNED is you know, they have to restructure their debt. They're going to have to refinance, and you know, as interest rates get even better, it's going to make the banks a little bit more lenient. I'm sorry if you guys can hear my daughter. She's not happy back there doing whatever she's doing.
Oh, good. That's how it is.
pull up this graphics group. They're looking rough at the moment, but that's usually where I become interested.
Which ticker was that?
GRFX.
Yeah. 32%.
Yeah, I don't think I'm seeing much on. I want to move on to the insiders. So yeah, this is kind of, guys, how I just kind of screen for some things that I haven't seen, or if I have seen them, just to kind of check up on what's going on with some of these things. Sometimes with insider buying, like that's where I saw PBF, and that's the other thing too, is there's some pretty massive insider buying. So it's the only thing is typically for our style, it's a little large for the kind of investment, but I mean, just look at these metrics. I mean, this is insane. It's trading cheap to earnings. It's trading cheap on a book value. It's changing cheap price to sales. It's trading cheap on cash flow, on simple free cash flow. What else do you want? Something. I mean, it looks really good, and it has insider buying. The fact that it hasn't trended higher than this, I don't know. Seems kind of wild to me.
I think I remember RK was doing research on them too, right?
I don't know. I don't remember specifically. Probably because to me, I mean, if you're doing this style, it just kind of stands out to you. Like, on why is that so cheap?
Yeah. But I also guess that was one, because people have gone through companies that he put up and have seen the gains. But PBF, I don't think it has gone up so much since he did it.
Yeah.
Then we have a new comment. WKEY. Welcome, WKEY. He's saying, I'm making a watch list right now too. Yeah, good.
Yeah, you can make yours alongside us, man. Like you can see on mine, I have a database, and then I label some things as on deck. So I have an on deck one, and then I have a watch list as well. So this is stuff that's kind of interested me recently. And you guys can pause the video, obviously, and look back if you want. And just, once again, it's not investment advice in any way. So don't just buy those stocks. Most of them I'm not in. So that means that's probably a good reason why you shouldn't be in, or think that it's possibly a good buy. There's things I'm waiting on these things. It's just I try and narrow this list down, because when you have over 1,000 stocks that you've looked at, it's just tough to just kind of stay on top of everything and making sure that the ones that you were interested in, if for whatever reason they start to get cheap, that you really start to hone in and then do some deeper digging, because it just takes time. If you're really going to dig in, you're going to start reading all the 10Ks and 10Qs, and you're looking at all these news articles and really trying to make sure that you understand the business as well as possible, which for me starts to become a necessity just because of the position sizes I take. You only have so much time to do that, so the important thing is being able to narrow down those companies you're looking at.
Yeah. By the way, I just looked at the chart on PDF, so I was completely wrong with the gain since RK checked them, because it had gone up a lot. But I was confused, because I know that there's a company that I've also looked at that hadn't moved, so I thought it was that one. Anyway, what's your saying? Are you guys swing traders or day traders? And he is guessing that we are swing traders. We are not anything of those. We are value investors.
Yeah, well, I mean, we're not like your traditional value investors per se. I guess you could argue that on the shortest side of things, we're somewhat of a swing trader. And then on the more longer side, obviously, we're value investors, because even for me to trade something, it's got to be in what I would consider on sale and within my margin of safety. So I kind of hold that first. But yeah, I mean, if something takes off and it gets quickly way over what I would consider fair value, it's not like I won't sell out of it. But a lot of times the stressed companies that we're looking at, it's usually some kind of situations turning around or something, which leads to the large return. And sometimes you have to wait. You got to wait for that to kind of unfold and work its way out.
Would you say you have like a range of your typical time horizon there?
Yeah, I've said it a few times before, but anywhere from, it's usually a few months on the shorter side, which is why I guess you could argue I technically swing trade. I have traded before, but it's pretty rare, and I don't really trust myself with the timing on those kind of things. It's almost like options. Like I don't really trade options much unless I like really see a clear catalyst in my mind. Another thing I want to go over with you, Johnny, because I know you're super bullish on it, is Alto. I just listened to an excellent podcast on renewables, and Alto at these prices are starting to interest me. I kind of see why. I feel bad for Justin because I follow all his stuff on Domo Capital, and people right now are just giving that guy shit for Alto, and I really think. I think Justin's going to be proven right very soon. The United States is offering a lot of money for these companies that are able to produce SAF and some of these alternative fuels, and especially with the corn supplies coming in right now, I think Alto has a lot to benefit from these things. I get it, management really effed up this last time, but I don't know. I think I'm gonna start digging back in deeper into Alto, and the other one that you've talked about a few times is GTE, which I think is in a great position. Similar, but I don't know. Now I'm kind of going back and forth after looking at PBF. I might focus more on PBF than GTE. Not that I don't think GTE is also super undervalued. I think it's really cheap, and I think just on oil, I just think PBF is like, I don't know. It's just insane to me where that's trading right now.
We can talk a lot about Alto and Justin, but just read his article and you can see that it's solid work, I don't understand if you're angry at him for following his thesis or something like that and you have lost money, it's also your own fault. So I'm still in Alto, it's my biggest position, and I think it definitely has potential, but the question is if they can unlock the value here, and in which way they're going to do that.
Well, and even to what he's saying, if you're trying to swing trade some of these things and you got burnt on Alto, because Alto was up, you can see where people saw Alto going before the earnings report. And if earnings ever come out that well, I mean, you can see what the stock price will do again. Management needs to be more transparent, obviously, but if they get their facility up and running, whoever's able to produce more of these alternative fuels is going to see the most benefit from it. And as prices get cheaper and cheaper, I think you're going to really start to see some of these companies like Alto really benefit from like SAF and all those kind of things. So I don't know. It's interesting. And ethanol obviously can be a decent player.
They have a lot of catalysts also that can be triggered. It wasn't all bad at the Q3 report. You got some good news on the carbon sequestration project, which we are getting close to the summer, where they said that we will see some more proper news on that, and I think it will come before the summer even. But I have to be honest, the silence from management now, it makes me a bit worried for the nearer term. But like you said, if they can show some good news, this will pop, I think, pretty drastically too.
Yeah, it's definitely some of the stocks I'm most interested right now in. There's been a few recently that have kind of come up, but I only have two stocks actually that I was interested in on the movers, so we can look at those too. And then what do you call it? We can look at maybe some of the on deck stocks that I have, or some stuff on my watch list. Just see if anything is kind of interesting there.
Oh, Dane, we have some comments again. What's he? First of all, he's saying he can only hear one of us. I hope we have not messed it up.
Can only hear one of us.
Maybe my sound is just a bit low.
Yeah, I don't know.
He's also asking if we are full-time or if this is a hobby.
No, it's not full time. Although, obviously, some way I'd like to get. Ask him if he can hear us now. Can you talk, Johnny?
Can you hear both of us now? It's a bit tricky to have two people speak like we are, because how the things are getting picked up and everything. So we have adjusted the volume settings and everything, and sometimes we miss on that. Yeah, he can hear us now. Nice. It's all good.
All right. Well, hopefully it hasn't been the whole time that's been down. That'd be.
Yeah.
Oh my God, the sound on this is always nuts. Can't someone just come out with a program that does all this more automatically? I feel like, it's nice to have the options, but the presettings for all these like OBS that we use, I don't feel like they're that user friendly.
No.
Well, sorry guys, if you've been listening and you haven't been able to, because I think it would be you, Johnny, that he wouldn't have been able to hear then.
Yeah, but it's all good. Things happen sometimes. He is saying that we can hear both now.
All right. Well, all right. Thank you for pointing that out to us. We'll make that definitely a short.
No, but it's a hobby for us. But a bit more like hobby. Yeah, you can call it a hobby, but we spend a lot of time on this.
Yeah, I guess I'd say it's like a side passion, but
yeah.
But either way, so I don't know if there's too much to dive into the historicals for Alto, because it really doesn't matter much. But I'll throw a shout out here. I just want to make sure I call it out right, because obviously we don't get paid to say any of this stuff. So the Business Brew, that's the podcast I was listening to, and he had on. I'll shout out the guy's name just because he deserves it, because it's well written.
Yeah.
Kyle Mowry, he's Grizzly Rock Capital. He's talking about the sustainable fuels and all that stuff. So it's a great podcast if you guys get a chance to listen to it. He touches on some of the other bigger players in the field, and some of the different kinds of fuels that are coming down the pipeline, and how much the United States government is trying to pay. By 2050, it looks like most companies are going to start to shoot for net zero carbon. So there's a lot of money that needs to be spent up front in order to create this arsenal of non-traditional oil products that are going to burn net zero carbon. So the government has to spend a lot of money to get these facilities basically up and running and help these companies out, because up until that point it won't be profitable. But in the meantime, there's going to be a lot of headwinds, and this money is going to be there's going to be a lot of earnings for some of these companies, as there's a lot of money given to them in order to encourage us getting away from oil and turning over to some of these alternative fuels. And that's part of what Justin argues about with Alto, is that that part of the industry is something that they could directly benefit from, being ethanol, producer of specialty alcohols really is what they are.
Yeah, and he's saying that that market is going to explode, and that Alto is very well positioned to take a fair share of that. But I think that thesis for Justin grew after some time off, because I followed him when he first started to talk about Alto, and in one of their quarterly reports they started to mention like this SAF thing, and then it just has grown a bit for as a thesis.
Yeah.
No, I'm excited about Alto still. I'm down on it, and that's painful. But I see that I I I believe that it can work out in the end.
Yeah, and I bring up the chart here just because if you guys are looking at this on a daily chart here even right before management totally missed expectations and kind of blindsided the shareholders, which is why everyone sold off, and that's kind of what management gets. You can't, if you would have came out beforehand and said, hey, we're spending all this money on these things, and then what do you call it we're just more transparent about that. There's a lot of one-offs at purchases. We had to take all our earnings that we should have gotten this quarter and pushed it into these other things. If you would have just said that, the expectation would have been so high that the earnings would have been immediately turned to shareholders. Your stock price wouldn't have tanked like this. But they're not doing a good job. They still haven't done a good job, which is why once again there was a bounce back here, because I think most people understand that this play will work out at some point. But management needs to say something, and the fact that we're just like in radio silence here. We'll see what the next earnings report brings, but if it's a good earnings report, you could start to see this creep back up towards the $5 or even higher here. And if it's another poor one, I think it's just going to be longer, and they're going to have to get to a point where they can start to show off that that they can pull this off. I know we had talked about Jeremy had talked about possibly selling the Western assets, and that now I think Justin has thought about that as well, just as more of a quicker short-term thing. I guess it's all on how much that they think they're able to produce in the long run from it.
It just makes sense to do that right now and focus on what they have at the Pekin plants and the carbon sequestration project there. And if they sell off the Western assets, they can fund it with that money, So I agree with that. That makes sense here.
Yeah, no, definitely. I'm not.
But I think it's a bit weird to me because it was touching $3 on the way up again after Q3 report, and then now it has just turned around, and obviously some people want out here and have maybe lost all faith, but it hasn't been any drastic news or anything like that. But of course, if you interpret the radio silence from management in a negative way, which you are right to do, I also do that. Maybe it has scared off some investors,
Right. So we'll have to see, and I think that's also I know we had talked about this a little bit off the stream, but I think that's what scares investors right now is the fact that they are still being radio silence. It kind of makes you feel like once again this next quarter is not going to be anything impressive,
Yeah, and I think the feeling after the Q3 was a bit that Q4 could also be.
Yeah, it wouldn't have turned around by then.
Yeah, but then again, I saw Justin was talking about something on Twitter that he was a bit more optimistic, I think. But we just have to wait and see. I can sit through Q4 and wait till the summer. But of course, if some bad news about the carbon sequestration program comes in now in March or whatever it is, that's not good. So we just have to wait and see here.
He was. This is from what is it? 2 days ago, talking about Velo, and Valero is another really big player in this field. And he was saying that their ethanol segment reported 109 million in net income versus 197 for Q3. Alto Q4, excluding any hedging marks, should be higher than any other quarter in 2023 and push them into positive net income for the year. If that's true, you're looking at something that's going to pop hard.
Yeah. No, so yeah, but once again, if that is true, why? What? It doesn't take much for management to come out and say something,
I don't know. Maybe that's just not their style, for better or for worse.
Well, they did. If you go back like 2 years, in January, they came out with some early, like an update on their guidance, which was very positive. So they have done it in the past.
Yeah, true. Yeah, it says here adjusted operating income was 205 million. This is specifically for ethanol from Valero, compared to 69 million for the fourth quarter of 2022. So, I mean, that's huge. 205 or 69. Ethanol production volumes averaged 4.5 million gallons per day in the fourth quarter of 2023, which was 448,000 gallons per day higher than the fourth quarter of 2022. Adjusted operating income was higher than the fourth quarter of 2022, primarily as a result of higher production volumes and lower corn prices in the fourth quarter of 2023. So, I don't know. I mean, I see why he's pointing that out, because that's, to me, very bullish.
Yeah. But I think you summed it up pretty good when you said, like, at some point this will turn around, hopefully. But that point doesn't necessarily need to be in the next months, but it can. And what CR telling us, we are very patient. He trades technical only, and if he's not right,
why isn't that? I can't find that post. Just trying to find the post to see what the other comments were on it.
Yeah. No, we are patient, and our style is a bit long term, Watsy, than just quickly trading things.
Yeah, see, and this is the thing. I don't think everybody really does great research, because, like, for instance, this buy and sold person's like, they still don't have a clear explanation for the Alto miss. So would we be prudent to think that the unknown factor may kill earnings next too? And he's like, this is a gamble more than investment given the unknowns. And, like, what? He's like, the factor is not unknown. There's a fire that impacted production. That production was already hedged due to the really strong crush margins. The company had to go out and purchase millions of ethanol to satisfy the hedges. Since they no longer had product to deliver, not being able to make money on the production hurt, but having them to go out and unwind the hedges by buying ethanol is what killed them.
Yeah.
So, but yeah, I don't know. So, I mean, we'll see. I just recently I started looking a bit back into Alto, especially at these prices.
Yeah, my last purchase was after the Q3 at 190 something. So obviously it's interesting for me here too. I still believe that it will turn around.
Yeah, at this point, just to keep it in my portfolio, I held a share. So I got one share of Alto. And but my cost basis was like, I think somewhere in, it was good. It was like a I don't know, somewhere in this, I can't remember. I'm thinking $1.70 or something like that is what it was. So I might have bought as this went up. I definitely got a few shares like at a really good price, like $1.30 or something like that, or 20.
Yeah.
Actually, that might have been where my cost basis was, because I think even that one share is still up like 50%. So
I think you went in around May there, April, May. I think you went in.
Yeah, because down here I was like, this is ridiculous. This is so cheap. It's insane.
Yeah.
I get quick current value, 245, but this isn't, this is a cyclical business. So, this number can jump, that's why I'm saying you can't just look at this value and assume that's a proper valuation.
Yeah. And especially with this Alto, it's about the, like you said before, the SAF and the carbon sequestration, which will add massively to their fundamentals also.
Yeah, so we'll see.
Yeah.
But I mean, that's part of kind of being contrarian investors. We're looking at companies that most people aren't looking at, and if they are looking at it, they're taking the 2 seconds that buy and hold did and saying like, oh, but why, they missed on earnings, and what can we say or do about that? And it's like, did you read anything more than that? You're just saying that. That's not, that they did talk about it. It was in the transcript. Yeah. And while that was a frustrating earnings call, they, it still kind of went over what had happened.
Yeah. And also in the from Q2 to Q3, there was a lot of positive momentum in this company.
Yeah.
There was a lot of people on social media also noticing it, and everyone thought that Q3 would like kill it, you know.
Well, and
And
that
then
showed
of
in the
course
share
when
price.
they show the opposite, this is what happens.
Yeah. But that's why I
And
said if
not
they would have just put
necessarily
out, you know, that
justified.
they had some one-off events, they wouldn't have had that. I mean, obviously they wouldn't have the share price increase when it did either, but, you know,
Yeah.
I think at this point now, if they had been transparent on the last earnings call before it came out, you would be seeing this trending upwards right now, not trending downwards because people aren't sure and they don't have faith in management.
Yeah. Yeah, I think so too.
You know, a huge
And
part
and that's
of this is
also
management. They, you know, management has to prove that they can that they can support shareholders, or people aren't going to buy it.
yeah.
All right, I'm
And
keep moving on.
management, when we talk about it, management sounds like a bit incompetent, but it's not all bad from them also. They have done done some good things in the past as well, but I know there was a CEO change in the summer, and of course he has maybe had a rough start on his spell as a CEO. So yeah, people need to prove themselves, but we give them some time, all right?
Right. No,
Yeah.
I think their overall business strategy is correct. I just think that the way that they market themselves and the way that they communicate with shareholders is poor. You know.
Yeah.
So, which, to be honest, get the business working properly, you know, and focus on that. That's my bigger concern as a shareholder. You know, not being able to properly give me the news. Yes, it seems stupid. That should be basic communication skills, but whatever.
Yeah. At some point, things speaks for themselves, and Alto is not there right now, but they have potential to get there, and then it's a no-brainer.
Right. So
Yeah.
we'll see. We'll see.
Yeah. All right. What have you pulled up?
All right. First one I got here. I've looked at these guys before. DAIO Corporation, provider of programming, security deployment, security provisioning, and associated intellectual property protection and management solutions. So it's all in kinds of programming security for electronic devices. Basically, is the overall idea of it. Have a bunch of different names that they work under. Have operations in Redmond, Washington, United States, and also in China. So some foreign risk there. But just looking quickly, share counts under 10 million. Revenues have kind of popped back up. We got around this area back in 17 and 18. Which was actually really profitable years for them. You can see here. Since then, things have trailed off a little bit. So let me just, have they done any acquisitions? Not really. So it looks like more it's an issue of turnover. Looks like but it does look like they're starting to increase their turnover again. So that's good. Book value, it's on a somewhat of a downtrend, but it's not like it's terrible compared to where it's been in the past. Haven't paid a dividend historically. Earnings have had some rough years, had some good years back in 17 and 18, and now we're net positive on earnings, and cash flows have also started to see some better years. I got a 7-year average of 22 cents a share. You know, it's not levered. It's considered safe. So if you go over to the actual balance sheet here, super clean, really no debt. You know, obviously earnings aren't, you know, nothing impressive. You know, like these are really small numbers. This is a small company. You know, it's got a market cap. I think, what was it, 30? Yeah, 30 million. So it's a small company, but it trades as a net to working capital per share. So it's a little overpriced on my valuation here. So we'll have to see if there's a chance that this can grow at all and or improve margins. But overall, it looks like a historically decent company. You know.
I couldn't find any news on the pop yesterday.
Is that what it was that had a pop?
I don't think it's nothing.
Some extra volume. It looks like it had. Is there someone buying right now? I mean, what are these massive pops here? Like, you know, every time it touches this floor here, it really seems to pop. Just going to look at a longer chart. There's a 5-year weekly. So you can see every time it gets down into this mid-2 range, it starts to bottom out there. But, I mean, some of the, you know, this does recover well. It could just be those are earnings periods based on the chart when I look.
Yeah. A bit tricky to read that chart.
But yeah, we'll see if anything's been going on with it.
Oh, have you seen the owners?
No.
Do you remember? Let me check. It's Oh yeah. Remember that in the arcade streams there was a guy called Dave Kanen?
Maybe.
There was a few streams that he was speaking about him because he saw his name pop up in some stuff that he owned, but he's involved here.
What is the guy's name?
Dave Kanen or Kanen, Kanen.
Are you looking at the like the 14?
Yeah, that one. Oh no! In Whale Wisdom.
Are you talking this one?
Yeah, that one.
Oh, sorry. I thought you said when you spelled that, I thought you said something else. So I skipped over that one.
Yeah.
I mean, some of these are definitely what I would consider, you know, type value type companies. So
Yeah.
he's owned this since 2021. So it's hard to
Sold a
say
little
exactly
bit
where he
recently.
is. He's down probably a little bit, but you know, I'm curious because so the business is cyclical as 60% of revenues are CapEx driven. So it's cyclical in the idea that they have to spend. Is this all on research and development to stay ahead of things? Doesn't look like it. And CapEx, where's the CapEx here?
I have pretty stable capex for last years.
Yeah, but I see what they're saying, that, you know, when they spent a lot on CapEx here, you know, 17 and 18 were really great years. So
Yeah.
So even more chips are going into more things than ever, with 5G being a main catalyst for the IoT market, where chips-infused intelligence makes analog object digitals and amenable to data analytics, become more complex. Security concerns are increasing with the multiplication of touch points on the internet powered by 5G and the Internet of Thing revolution, which is the secular tailwind for Data IO's Centric X secure provisioning solution. They're involved in automotive. I mean, I see what he's saying. You know, all these are important things. Obviously, we're trying to protect, you know, all our sensitive stuff, especially cars. Did you see that movie? Was on Netflix recently. I know you guys probably get different Netflix movies at the same time, but it was it's like the end of the world. It was based on a book, and all the Teslas though got taken over by like the AI, like someone hacked them or something, or like whatever it was.
Oh no, I haven't seen it.
There's like all these Teslas that were just crashing one after another because like someone had like messed with them.
I'm sure Musk is happy with that movie.
Yeah, right. It was an interesting little movie. It's kind of strange at times too, but whatever.
Yeah, what's he saying that he has seen that movie?
Wait, what's up?
What's he in the chat? He say that he saw that movie.
Oh yeah. It just makes me think like anytime I see like security and stuff like that, like, but I mean, people, there's certain cars in the United States. I know like Kias and Hyundais, I think over here is the other one. There's like a really easy way to basically steal the vehicle, and like insurance right now is insane on those vehicles because your chance of them getting stolen is like super high. All right. So, not investing in a company that takes care of the security risks on a technology side is, that's a pricey miscalculation.
Yeah.
Yeah, you know what? I gotta pull up the chat on my laptop here because before can you ask how the stream's been? Because I didn't want to have too many things running. Like I didn't want to have like too many things streaming and pulling, and slow the internet down too much. But if it's been running okay, I guess I shouldn't worry about it.
Yeah, I think it has been. I've seen. Well, I haven't looked at it too good, but I think good.
Yeah, okay, now I can see the chat, so I pulled that up finally.
Yeah.
Quarterly or yearly consistent growth. I'm going to swing trade. Not many companies can do that. Yeah, Watsy, you have to be patient in these things. But this is also, so I don't know if you watched RK's streams originally, but he had quite a few positions, and just in my way of getting kind of quicker returns in the way that I'm doing this, and to kind of justify my 50% return threshold, you have to take pretty large positions. That's one way I can manage it, because I don't find a ton of companies that meet my criteria. I'm very strict on my criteria. So just with that in mind, it can take a while before you feel like you're just kind of, they call it flipping rocks out here. You're just looking for a diamond in the rough out here. But so far it's worked. So, I can't complain. So it looks like Q3 for them, EPS was positive, much more than expected. 25 cents better than expected. So they're expected negative. So we'll see. I would like to go back and look at their future guidance and see how they've what they've said for future guidance and how accurate that's been. Maybe management can give you a hint then going forward on how much you can trust them and possibly get involved in something like this. But overall, right now, it looks a little expensive to me, just based on the recent history here. You got anything else you wanted to add to that one?
No, sorry, I'm just reading a few comments because I'm trying to find out what caused the almost 12% gain here. Someone is speculating if that guy Kanan has bought more, because there's been an increase in the volume too.
Yeah, Watsy, I'll have to check out that Market Smith to see if it's anything I could just add into my mix of things. This is why we build our spreadsheets, because it allows you to kind of track a lot of the things that and kind of keep up on things. you know, what's their average volume?
$37,000.
Yeah, so I was just seeing if there was a reason, you know, or if someone's starting to buy in here at these levels, because,
Yeah.
you know, the 1-year target estimate, I don't know how many analysts are making this number up. It says 650. But it also looks like, I mean, if you look at, you know, in January, it had another pop up to somewhere in this range and then came back down. So I don't know. I don't know if there's enough there to. Someone's making big purchases, though. I mean, you see this. It's the same kind of volume. You got 520,000, and then once again 520,000. You know what I mean?
Yeah.
So unless those numbers just happen to be close based on that kind of volume there, but I would think that's unlikely, but not impossible. Cyclical just kind of needs more for me.
Yeah, I agree. It's but at the same time, if you compare to last year, they have improved the numbers.
Yeah, no, it's not bad by any means. It's just
No, not there yet.
trying to figure out what it's gonna do going forward, and not too many people are talking about it or anything. So, but you know, actually, I'll throw it on deck. It's interesting to me.
See that owner.
What'd you say?
I think it's interesting to see that owner. I didn't expect him to be in a 30 million market cap company.
Yeah, well, when I look at the numbers of when they were like back in like 18 and 17 when they were doing well, you know, on a high side valuation, let me see what I could get here. I could see it easily being, you know, six something.
I was gonna say.
And it got higher than that, so. You know,
I was also gonna say like 6, 7.
You know, it trades high, honestly. I mean, I think this is the growth idea. I don't know if it'll ever get this high again, because I think people, you know, that was the first time it had popped like that. So people tend to over exaggerate
it
the
traded
possible
15.
growth.
Yeah, that was much higher.
But I could see $6, you know, if this starts to cyclically become.
I think the spike in 21 is more.
Yeah, more representative. Oh,
Yeah.
Is this foreign? Hang on, this GRFX when I gotta just adjust. I'm only getting annual, so I gotta just pull in the yearly data, not try and pull it in as not too many years on this one to look at. Cash flows. Okay, it's nothing historically wonderful. So, just to move on to the next one, this is Graphics Group. It's an investment holding company principally engaged in the provisions of processing and sale of graphite products. Has 3 different segments. It's engaged in development, production, and sale of spherical graphite and graphene to enhance renewable energy. Alto. engaged in development, production, and sale of key components in electric vehicles, lithium-ion batteries, and then the commercial experience in the deep processing of graphite and producing battery-grade purified spherical graphite. Then they also have the landscape design service segment, which is engaged in provision of landscape design services. And then the catering segment is engaged in management and operation of restaurants. This is why these ones become hard to value, because like, okay, we got a restaurant business, I got some landscaping services, we're producing spherical graphite. Interesting to say the least. It's paid off a little bit of debt recently. It doesn't really hold much cash on its books, but I mean, that's not the end of the world. Historically has no earnings, so that's a bit of a turnoff. Revenues are kind of declining, if anything. They are continuing to make some purchases. It definitely trades a little expensive. Oof. Although, maybe that's why I pulled this one up. We can find a reason to get interested in something when it drops this much.
Yeah.
That's a big trade-off. What's the news here?
Nothing.
31% down on no news. Either that. Okay, someone sold out or something.
Let me check Yahoo.
Because I mean that's pretty brutal.
I can't find anything. Twitter has the answer.
What's Twitter saying?
Also nothing.
No, really?
I can't see anything.
What was it? GRFX? Yeah. Why is it not the latest?
This is a Hong Kong company.
Oh, it's from Hong Kong.
Did you see that?
Yeah?
That makes it a bit more tricky for me.
Yeah, I don't know how much I'll be able to. I'm not saying it's not fairly valued, but there's a lot going on here, and it's going to be tough for me. I mean, you know, who knows? This is up 10% in the after hours too. You know what? I wonder if it's something to do just in general with, you know, China. There's always the huge Chinese discount. You know, at this point, everything is discounted from China because there's some real political risk involved in investing in anything just between kind of the Western world and China, you know?
Yeah. Yeah, I wouldn't be able to say too much here.
Yeah, I'm just going to put some quick notes about the foreign risk, and that's a holding comp, needs more, too expensive. But yeah, I don't know if I have too much more to say. I'm going to actually put it's kind of young still too. You know, just adds to the risk level with it.
What's it's letting us know that it's down 70% in a week?
Yeah, that's what I'm saying. So I mean, it's pretty ridiculous. No earnings, you know, so it hasn't even proved profitable yet, even with all these multiple segments. I get that they're doing. I'll throw that in there too. That they're doing a lot of acquiring. Obviously, it's a holding comp, so they're trying to find businesses, but they're starting to take on. Was it that their share count has creeped up? Yeah, I mean, you know, they added a little share counts. Margins are okay, but they're not. There's not much impressive yet. I think this one just needs more.
Yeah.
So. All right. Was there one that you wanted to go over?
Oh, maybe EMKR.
Let's go to my ad hoc one. Yeah, I can't remember quite the last time I looked at these guys. It's definitely been a minute, but
Yeah. And same here, and I pulled them up now, and it looks a bit ugly.
yeah, I'm trying to think. That's right there, aerospace defense. I think if I remember right, it all has to do with the contracts they get. In terms of obviously how much money they're going to make, and as those contracts run out, they can kind of get screwed. You know, if the United States isn't renewing like defense contracts and stuff with them, then it materially is kind of a killer for the business.
Yeah.
I mean, obviously, this last trailing 12 months has been really harsh on them.
Yeah.
I mean, they do have some cash still, but they had to take on debt. Even with all that being said, earnings and cash flow has kind of gotten crushed. They had a really big acquisition last year too, 60 million.
Yeah, seems like, and they probably bought it. Do you think they bought it with shares because the share count is up?
It could be because I don't know how much money they would have had to buy it anyways.
Yeah. And so far, it doesn't seem like that. I mean, CapEx is way down since 2022.
Yeah.
What's in the chat is asking of what we think about REE.
Yeah, we can pull them up.
Yeah.
I just want to.
Yeah, I just quickly on EMKR. I didn't see too much interesting here right now.
Yeah, no, I think I just want to update my my numbers here. Darkest before it's dawn. This is from 2022. I remember reading that article. Who knows when? A while ago.
Yeah, I saw that no one is talking about these.
Yeah, it's pretty levered too. Now it's starting to become levered.
Yeah.
So. Yeah, I guess I shouldn't say it's too levered, but it's starting to lever now, and without any more contracts or any more news coming in, I don't necessarily see anything turning around anytime soon for something like this.
No. And you see, if you go back historically, the last 2 years, it's the first years in a while that they haven't had cash, excess cash. I mean.
That they have excess cash? Is that what you're saying?
Sorry?
That they have what? What was the last thing you said?
No, I said in my data set since 2015 to 2021 they have a net excess cash per share, and then 22 and 23 doesn't have anything, and that's also when they made the acquisition and took on a little bit of debt and raised the share count. So
yeah, so I mean they're trying to do something, but obviously it's not working out yet.
Yeah, and book value in that same period is down.
Yeah, I mean, they must, like you said, they purchased something with a 60 million. I don't know what the purchase was, but obviously it didn't help them much.
Yeah.
All right. Yeah, we can pull up RE real quick.
He also threw in WKEY.
I feel like I've looked at RE. Yeah, I have looked at RE before. It's EV. It's Israeli.
Oh yeah, I know them.
Do they have, I don't even know if they have any earnings yet, though.
No, I don't think so. A lot of these companies, they don't have it. What are your thoughts, WotC, on RE? Do you know them well or what?
Yeah, this is just burning cash still. So it's going to be tough for us, WotC, to do much with this. I mean, they only got $1 million in revenues, and they're burning through a lot of cash still. So
Are you saying they have earnings?
they have earnings? I don't see anything, man. I mean, we're talking them burning hundreds of millions of dollars right now. They have a revenue. I don't know if that's what you're saying. They do have $1 million in revenues, but that's not earnings.
He's saying they are not making money.
Yeah, I think you're possibly confusing revenues and earnings then. I'm not saying that you're wrong. Maybe I'm just missing what you're saying.
On WKEY, do you have a lot of data there?
Just looking through what this person said about RE real quick. I haven't pulled those up just yet.
Okay.
Yeah, it looks like Re's trying to shoot for 10,000 vehicles annually. So WotC, when I see someone like this or a company like this, it's how accurate they can start to produce 10,000 vehicles. You got to look into similar companies and how much their vehicles cost, what the margins are on that, and how much they're going to be able to return. Without knowing some of those numbers, it's going to be tough to really put a valuation on it. And at that point, you're just trading on the idea, which is fine if that's your investing style. But for me, it's tough to see. There's a lot of competition in the EV market. And I don't even know specifically in Israel. I mean, let's say they're like the Tesla of Israel and there's no one else really competing with them. Sure, maybe they have a market there and they may do very well in the future. But that's the kind of questions I would want to delve into more if I'm looking at something like this without really being able to go off like historical valuation. And then watching their leverage, watching how quickly they're burning through their cash, because if they can't raise much capital, it looks like their interest rate was really good. But if they start to burn through that cash, and they start to run out of debt, what are they going to have to do, and how does that material affect shareholders?
He's talking about some volume that caught his eye initially, Dane. And there's been some spikes on the chart.
Yeah, and I mean, if you're just going off trading and technicals, I mean, stuff pops, it bounces. It's psychology. People hop into things just when they're doing well. So if the volume and stuff looks good to you, like I said, that's not really my specialty. But the volume is relatively low. 67,000 is the relative volume. I mean, on some of these days where you see some big pops, yeah, it can be a little bit more, but most days it's pretty low. It's pretty low causing these moves. But it does have a really low share count. So, I mean, these things can move around quite a bit on not much volume. But I would just need more. I'd need more to be convinced of anything for this one.
Yeah. They need to prove themselves more.
Yeah, actually, last time I looked at it, I said if you're going to value it, trade off the technicals, because it was tough to trade off any kind of valuation.
Yeah. If you have more tickers, WotC, let us know. We would gladly pull them up and just see if we find something.
Yeah, I can also go into my database, start looking at for the watch list and stuff, see if there's anything that's interesting there. Because it's a Switzerland-based e-security company, so it's actually probably similar to DAIO that we just looked at. But
I don't have enough data on that one, so sorry, I can't say almost anything looking at my spreadsheet.
Yeah, it says it's pulling it. 10 years. Wait, hang on. I gotta just adjust this because this is they report biannually. Now, once again, this is another one that's just burning cash. It's a really small market cap. So they really haven't proven themselves to me, WKEY. No earnings. I mean, revenues are slowly gaining, so they do have that. Well, not really. I mean, they're just kind of bouncing around. This last year was decent for revenues, but they are still burning a lot of cash just to even keep that up. Now they're starting to take on some debt. They don't have a ton of cash on hand. Share count's creeping up.
There was a spike since December on the chart, like a double, and then it has pulled back since then.
Gotcha. Yeah, and the other thing, WKEY, too, is you know, as inflation. I mean, I know this is a Swiss company, so company, and I imagine the interest rates in Switzerland are somewhat similar to the United States. I don't know that for sure by any means, so I'd have to look into that. But if they are, and inflation data is starting to come down in the States, it's probably starting to come down in other parts of the world. And as that retreats, and there's a possibility that some of the governments will lower overall interest rates. A lot of these companies that are risky and will obviously need to refinance and restructure in the future, they kind of get pops off that because that's really bullish news because the company has a lot more time. And, you know, even if you're trying to value something like this, you know, they always say that it's the future value of all discounted cash flows is what your valuation is. So it starts to be that there's a possibility that this could produce free cash flow. And if it is, then, you know, that's why you'll see something like this pop. It's not guaranteed by any means, which is why these are risky stocks, which is why you tend to see some of these things kind of trade all over the place because it's either a lot of psychology or a lot of what ifs. And but you never know. And every once in a while, you know, if you pile into one of these companies that isn't proven, you can kind of get lucky. If I was going to look at those companies, though, I'd definitely look for people like Elon Musk. I'd try and find, like, you know, relatively positive. Sorry, guy outside screaming, so my dog's going to be screaming now. But
Hey Dane, on Thursday I pulled up. I added a company on to my tracker, and then it went up the day after on. I don't know what it was on, but PED. Can you want to pull them up?
Sure.
Because it was a small one, but it had some interesting things, so I decided to add it and just track it.
Yeah, I've looked at them before.
Yeah.
I'm not sure when the last time I looked at them though was. Might be in a minute, but. Just taking a sec to pull it in.
Yeah.
Oh, and it's trying to calculate it. Hold on, I gotta just adjust this back to quarterly.
They had one owner who owned 2/3 of the company.
I mean, it looks good just recently. Obviously, they raised a lot of shares and whatnot. Sorry, my dog is going nuts here. But no debt. I mean, this looks interesting.
Yeah, and it's pretty. It's not. It looks neat, you know, and it looks well run. And if that guy owns 2/3. I think he knows the industry well. He was an oil businessman. And it's close to the 52-week low, you know.
Yeah, I got 91 cents as a fair valuation. I don't know how much they're spending on CapEx right now, and I'd have to figure out. Are we assuming that this is in the lower environment for?
In my sheet, it says very little. It's like it shows up as 0, but so it's almost nothing.
No one's really said much on this in a while. I mean, it's another one that's obviously commodity trading, so it's cyclical, and we'll have to see where oil is. But
yeah,
one thing I like to do just real quick, and you know you've seen me do it before, is compare it to the price of oil and what that's done. So let me just pull up oil real quick. Let me just pull. I'm just pulling up 3-year weekly charts. I think that's going to be somewhat easier to see how it's traded. Not very close, to be honest. Somewhat bullish when obviously oil's up, but I'm actually surprised how much it's been trading down.
Yeah, it looks very bearish at the moment. And they have no debt, so they have cash, and yeah. But I don't like the dilution. But since like last year, it hasn't gone up so much.
I mean, in here, there's a few guys who see the value here. I'm not saying I don't see what you guys are saying. It definitely looks cheap. You know, produced an average approximately 2,006 barrels of oil equivalent per day in the 3 months ending June 20, compared to only 1,000 produced in the 3 months of last year. So they're producing a lot more. They have 0 debt, which is kind of crazy. You know, if oil trends any higher, this could be pretty good looking.
Yeah. And did you read that article, Evolution Petroleum Plunges After Earnings?
No, maybe. I don't know.
I think it's the one above the one you had there. Because they are working together with Pedevco.
Gotcha. So it's probably just trading low right now on the fact that, you know, this recent earnings has been not as great.
Dane, what's is asking you about your sheet. He likes it and wonder if you have made it or if it's something you pay for.
No, Watsy, we made this. We made this based off the idea of what RK had built. Mine's pretty close. Mine's like almost a 1-to-1. Obviously, it's my own version of it. I built it through Excel, and I think he used Google Sheets, so it took a long time to figure out how to build it and to use it. But no, it's great to have. Honestly, I couldn't do what I do without it.
Yeah. And he's also asking, when you said RE had no earnings, did you mean they had negative EPS?
Yeah, from what I remember, yes, the EPS was negative.
Yeah, it was negative, and by a lot too.
Because I mean, EPS is earnings per share, Watsy. So if earnings are negative, then their EPS is negative, and vice versa. That's just EPS is just multiplied by the share count. So
Yeah. No, but I thought PED was I wanted cheaper, and of course it was up like 6% yesterday. So I did this on Thursday, so it was even more cheap. But I had like it would be interesting maybe at 50 cent.
yeah, I'm just pulling up the actual website because my interest here would be if they have a looks like they have a spring presentation. Because I'd like to see what their idea is going forward.
What do you think about a company that has one owner owning 67%?
Depends on who it is.
Yeah. I did a little bit of research on it, and to me, at least, it seems like he's respected in the business and that he knows the business or the industry.
Yeah.
He's asking you, where do you pull the data from to your spreadsheet?
I pull it from ShareRadar, Open Insider. I pull some from investing.com. There's quite a few websites and stuff that I kind of scrape data from, but ShareRadar is the main one I pay for. That one I pay for, which gives me not only like my metrics and my fundamentals, but I have it pulled in two different ways. Some of it's for just companies in general, and then on my balance sheet or on my fundamental one, it pulls in like everything for each year and dissects it up so you can look at it like that.
Yeah. And then we have a lot of custom calculations that we have based off of how Roaring Kitty did it.
Yeah, I just noticed. I think your camera froze.
Oh no. I don't know how to fix that.
Oh, it's just not. Now you're just like a cutout, like a cardboard cutout.
Yeah. And what's it, just to add also, there are, because I also have a sheet, you don't see it right now, but I'm using something called Wise Sheets for my data. So there are other alternatives than ShareRadar as well. And as for the other resources, we use the same websites and Seeking Alpha and Open Insider and all that stuff. So if you wanna start a project like that, you have some options.
Yeah, obviously you definitely need to know the insides outs of either Excel or Google Sheets, but it's not super intense, but like as you start, you can kind of build out what you need and then adjust it over time and start coming up with what kind of works for you. And I've told people too, if anyone becomes interested, that we could go through a little bit more specifically. Oh, he's back. There you go. Now you're back.
Is it working?
Yeah, it's working now.
I'm a tech genius.
Would you unplug it?
No, I just switched it off and on.
Oh, that same difference. Brilliant.
We have some short video material today, Dane.
Yeah, as always.
Yeah.
If you want to see how qualified we are to give investment advice, just please watch our short videos.
Yeah, only the short videos.
This is quite the presentation here. This is really going into depth. I'll have to dig through this a little more because I was just kind of scrolling through to get an idea, but they actually are talking a lot about the unproven areas and how they can actually get oil out of these areas in their development plan. So, but they have a lot of money to keep spending on CapEx to keep developing the land and to keep increasing their amounts of drills. So it's interesting. This is an interesting one for sure.
Yeah. Risky, but I like that they don't have. To me, they seem a bit well positioned, and they have some cash and no debt, you know, and they are generating cash flow.
Yeah, no, I think it looks like they're headed in the right direction. I mean, you know, I kind of find oil to be somewhat bullish going into the future right now.
Yeah, I agree.
I think it's trading somewhat reasonably right now. You know, I keep seeing a lot of things saying that they predict oil to hit around $100 a barrel again, which, I mean, it's tapped there before. So it wouldn't surprise me if it does again.
Yeah.
Just going to my watch list here, seeing if there's anything that's kind of worth checking on again. You know, see, I'm looking at all these energy plays that you and I have found, and they all say the same story where they just don't seem to get any higher valued. Like EPSN to me seems cheap. GTE, RE again, all of them seem cheap based on kind of my valuations, and it just doesn't seem to mean much to the markets.
No, they just struggle to get up again, and that was also the problem because, you know, in the summer oil was much higher than it is now, and you know, Ring Energy and all they struggled to establish themselves a bit higher. So I was a bit disappointed in Ring especially. But of course it has dropped since then. So Ring, I'm paying attention to Ring and Bry and all of those.
Oh, Bry's another one. I haven't looked at them in a second, but Bry was another one I agree. That looked really well run.
Yeah, and they also have a dividend, if I remember correctly.
Yeah, AMPY. Have you looked at them ever? Amplify. They're another one I like.
Yeah. I added them. I added them to the tracker.
Yeah, I just wanted to go. I'm gonna look at my on deck stuff just real quick and see if there's anything that looks like it's cheap but also kind of interesting right at the moment. Alibaba.
Yeah.
Where's Cato trading right now? Cato is one that I've been in before that I like. They seem relatively cheap. They're a retailer, which I think most retailers cyclically right now are kind of struggling.
$7.
Yeah.
The chart doesn't look too good, so but maybe you can argue it has flattened out a little bit since November.
Yeah, it's starting to trade and kind of stay around this area, but still kind of a downward trend. You know, I had a purchase at 640 being interesting, and actually you look at tapped 780. But I think my issue with that one, and it's been this way historically in the past, it just kind of needs like that market to turn around before it's going to do anything. And until it does that, I don't know. I don't know what else is going to cause it to pop high enough to equal kind of the returns that you and I look for.
What is your take on Con now? Because they have also, you know, they it seems like nothing happens there
With what?
with Con.
Well, didn't they merge or whatever?
Oh, really? I must have missed that then.
Cons had a huge run up.
Have they?
Yeah.
Okay, I'll take it back then.
Yeah, no, Cons was a real interesting play. The problem is I had sold out of a big chunk of it, and then of course it had this huge jump. So let me zoom in on this chart here. I'll show you my beautiful play. So Cons, I got in, I don't know, somewhere in the $2 range, and it had this jump up to like 3 something, and then started pulling back. So of course I'm an idiot and sold out here, and then like the next day it got bought out by someone. And like, as I was just thinking, I'm like, it's not really doing much. I don't know what's going to be the catalyst for the stock. And then before I knew it, it's up to $5.
Yeah, I see it now. I don't know how I missed that because I lost a little bit of interest. Remember, we pulled them up. We pulled them up. It's a while ago now. It was in December or something. And then, yeah, I lost a little bit of interest in it, but I shouldn't.
Yeah, no, I kind of lost interest only on the idea that I didn't think there was enough going on there. I thought I've always been bullish on the VIE structure, and they merged with someone else who was also kind of like debt ridden, but it improved both companies' liquidity position. So it was bullish for Cons, but yeah, I got out at the wrong time. I think it actually could have been when I saw Adtherin or something like that, and I decided to put my funds into there. So I mean, it didn't not work out for me, but yeah, I got out of it.
Yeah. All right. That's a missed that one. And did they find? No, there wasn't no insider bias, right? That was a bit annoying in Con. The insiders were so careful.
Yeah.
What's he saying? Kind of risky holding Con through earnings anyway.
Yeah, but when I'm in Con, I'm in it for the idea that everybody rates them so harshly because of the debt, but the debt's not really their debt per se because of the VIE structure. So I don't mind holding Cons through earnings. If you look at their chart, look at a long-term chart of Cons. It gets to a point where it looks really ugly in some environments, and then it always comes back. So it's like one of those companies that's like kind of hard to kill, and just on their structure where they lease out the credit basically for their things to buy. It looks really ugly at times, and then it just kind of seems to come back. So
yeah. He's also asking about NS New Star Energy. Have you done them before?
Maybe. Hang on, let me pull them up. I gotta start doing, because I know we write the tickers that we looked at. I gotta start making like a list, because we start looking at so many tickers and I forget which ones I've looked at. I'm always trying to figure out what the hell I just talked about.
Yeah. No, but don't worry, I have them here. I can send it to you.
Yeah, shoot me a text of the list so I can put them in the...
Yeah. We should probably also add the BNED and Alto today, even though we didn't check the fundamentals. We have spent some time talking about them.
Well, we're always talking about BNED and Alto.
Yeah, we are pulling up NS now, what's it?
Well, I gotta pull it up because Excel's not giving me the information about the business or anything?
I have it here, but there's a lot of crazy words, so maybe you should just do it anyway.
All right, so it's engages in transportation, terminaling and storage of petroleum products and renewable fuels, transportation of anhydrous ammonia in the United States and international, operates pipeline storage and fuel marketing segments. Pipeline segment engages in the transportation of these storage segments, obviously in the storage, handling, and other services for refined products, specifically crude oil, specialty chemicals, renewable fuels, other liquids. And the fuels marketing segment provides bunkering operations in the Gulf Coast and blending operations, primarily for ship owners, including cruise line companies, marketers, and traders. Out of Texas. Market cap is 2.7 billion.
Yeah, and check, they are trading at a 52-week high at the moment.
I mean, cash flow is pretty great.
Yeah, and big volume last week or this week.
They're really levered. That's one thing that I noticed right off the bat.
Yeah.
And share count has been creeping up for a while.
Dividend. And earnings are not great, I guess, but it's all right.
Yeah, they're all right.
Yeah. Do you think they have bonds or what?
I haven't looked at their how their debt's structured yet.
I'm gonna check FINRA.
Oh, so Sunoco is just acquiring them.
Oh, is that why they're up?
Yeah. So New Star Energy shareholders receiving 0.4 of a share of Sunoco stock for each share they own. So how much is Sunoco stock? $58.
All right.
So 23. So it's saying that has it went through yet? Oh, this is recent news. So right now it's trading at $21. So you might be able to guarantee $2 off this. Because if it's trading at 0.4, if it's $58.25 and you get a fourth of it, you get 0.4 of a share for each New Star Energy that you own. That means you would get it gains it, like it should be worth $23.30.
I'm not sure if it has gone through yet, but they say like the company said the deal will be immediately accretive with 10% plus accretion to distributable cash flow, blah blah blah. So it's probably going to go through, and that's why you have the volume.
Yeah. So no, it's interesting. I mean, there's not a huge return here. You could make $1.74 on this.
Yeah. Do you have any comments on New Star? What's
8% return. It's an 8% return you could get automatically on this if you buy and the deal goes through.
Yeah. Because they bought at 7.3 billion, right?
7.8 it said.
Okay.
It's up a little bit in after hours, so I guess it's interesting. They have preferred units. Or they're just announcing preferred units? I just want to pull up the SEC because this is strange that they have all this going on and then it just got bought. Like,
Yeah.
I'm assuming all this will continue and it will just be technically owned by them. But no, that's not true, because if all of a sudden you're only going to get a fourth of a share of Sunoco, it's just going to become part of, like, Sunoco.
Oh yeah, you saw the news, yeah. This wasn't on my radar, at least. So thanks for the ticker.
Yeah, no, it's interesting, Watsy, but at this point, just if you go back, where was the chart for NS?
We're a bit late, I guess.
Yeah, like when it was trading at $17, then I mean that's great. But even at $17, it probably would have looked a little expensive for me. I don't always value everything at like the firm valuation level. I usually value it partly because I'm looking for such a margin of safety, and usually a firm valuation is going to be a lot higher than what I would pay for something. Obviously, that's why I'm getting my margin of safety. Like, you know, you got to pay up when you're going to acquire something. So I typically won't be in a lot of things when they get acquired because, I mean, sometimes I will be, but the valuation that once it gets to the peak, it's going to be over what I would pay for it.
Yeah.
But no, good find. I'm surprised I didn't see the news for that. Usually I'll see something like that in Wall Street Journal. They have a lot of debt though. Holy shit. It's just crazy to me to hear that people are have billions of dollars of debt.
Yeah.
I know to a big company it doesn't matter, but it just always sounds crazy to me that like someone has like $3 billion of debt. Just want to look at something real quick.
Yeah, we are every Saturday and we are every Tuesday and Thursday. You can find the schedule in the channel description. Tuesday it's only Ranger Dane, and Thursday it's myself, and then we try to do the Saturday together where we summarize like maybe a little bit from both our streams during the week and just what has happened during the week. So we try to do it 3 times per week. And our times changed a little bit. This is the first time we have 12 p.m. on a Saturday. But what do you think, Dane, so far? I kind of like it.
Yeah, no, it's been fine with me. Like I said, my thing is there's going to probably be weekends I can't do it at this time, which,
yeah,
you know, just because it might be with family or something like that. But I don't know, even if I travel and I'm on family, I could break, you know, if I have the laptop and I'm able to do it then, it might be fine.
Yeah. If you want, you can check out our Twitter where we try to post if there's some changes in our schedules and stuff like that. Then you can keep up, you know, with the times. But we try to be as consistent as we can.
But yeah, because we're coming up on the 3-hour mark here, so we'll probably call the stream then.
Yeah.
I'm just trying to do a little calculation here. I'm trying to see how this traded in comparison to the enterprise value.
You mean the 7 billion figure?
Yeah, I wanted to see if that's what if they pay that based on there. So if it's the 2156 times 5969.
Yeah, nice, Watsy. We would love to hear more from you, and if you have any tickers, just save them for a stream, and we can go through them together. And we would like to know if you know something about the companies as well. You know, that's the whole purpose, to create some discussion and conversation about tickers. And you know, we have said in the past, companies that we are very bullish on, we would love to hear the bearish thesis, so we can try to go through it and have a discussion and see where we land. So yeah, cool if we see you again.
I'm actually surprised that that's what it trades at for when it's got that much debt involved and all the preferred shares. Although I guess you have to look at it as a discount if you're buying it with all that debt attached.
One article is saying that...
You want to go over, Johnny, or?
No, just saying that one article is saying that Sunoco's shares dropped on the news, but Newstar was rising. So
Gotcha.
I guess if you were a shareholder in the other company, maybe they didn't look at it as a very good deal. I don't know.
Yeah, probably not.
Yeah, we would like to hear like different styles and stuff like that also. So I agree. It has been a good conversation today.
Yeah, well, see, we get a lot of people who tune in and they're traders, so it's their style and the way of looking at things is very different than the way we do it. Which, you know, I think that's the cool thing about the markets is, like, you know, there's a lot of different strategies to investing, and you can really be successful at all of them. It just kind of plays to like your personality and what you look for, and being able to kind of, you know, change that into a strategy that becomes profitable to you, and then being able to continue to replicate that over time. You know, any way that, if whatever your strategy is, if you're able to continue making profit over time, then it's a good strategy. I mean, it's pretty much that simple.
Yeah.
But yeah, it was good having you in here. But
yeah, I think I don't have so much more. I think for me this week, I of course I entered BNED, and I didn't add too much to the tracker, but I added the PED. So maybe that's like a quick summarization of the week from my point of view.
Yeah, no.
And I'm very annoyed.
You know, I'm in BNED.
I'm very annoyed with the decrease in the Alto share price, but I'm gonna be patient there.
Yeah, I'm considering. I'm definitely gonna watch Alto very closely going forward here, and then some of the energy stocks that we've been talking about. Those will definitely be ones that I'm interested in, and maybe possibly enter into one of those if I can see something that's more of a clear catalyst.
Yeah.
But no, like I said, if you get a chance, check out that the Business Brew podcast, because it's really good on renewables and what the future of that market looks like, especially over the next few years. And then
and when you think about it like that, you get a bit excited when you and if you haven't, go and read Justin's stuff to read up on why it's so promising for Alto. He writes in detail very very well. So no, it's a bit exciting, but let's see what happens.
Yeah. And the other thing, Watsy, how did you hear about the stream? I'm just always curious to see how people ran into the stream. Did it pop up on YouTube or just or anything, or just looking around for investing stuff? Because we try to, I feel like, allocate our resources properly to try to get the stream name out there. Obviously, it's not the biggest deal. We keep saying, you know, through our results, people will find interest in the stream. You know, as we prove that the strategy works. That's when people are going to be interested. You know, we can talk all we want and say what we're doing, but when you hear our analysis of something and then it actually works out in the long run, that's what's going to convince people to tune into the stream. Because other than that, it's just a lot of talk. So it's going to be a mix of all those things, but
and for that we need a little bit more time. We have only done it for like, what is it, 1.5 months?
Yeah, it seems like a while now, but yeah, I guess it's been for almost 2 months now. But but it's slowly,
okay.
we're slowly gaining some things, and like I said, it forces you to really dig through these things and try and think of everything from different angles. Do you remember there was one of the companies I was going to look at the 10K for? Do you remember what it was? I don't think I saved it. Should put a note down.
Today?
Yeah, I thought one of them I wanted to read through more just to learn a little bit more about the business.
Was it the DAIO?
Maybe.
I will send you the list.
Yeah, I'll figure it out.
Yeah.
But, yeah, maybe if I just look through the list of stocks that we went over when you sent it to me, then I'll be able to remember which one it was.
You can also watch the stream.
Oh yeah, so it popped up on a related video on YouTube. Okay, good. I mean, you know, we're starting to get some viewership and whatnot, and we'll see where it goes from here. The stream was, you know, just a cool idea that, you know, ended up working out, you know, but because initially both of us were just kind of building our own spreadsheets, doing our own thing, so it just kind of happened to work out. Yeah,
so far it's I just subbed. Thanks Watsy.
Yeah,
spread the word.
All right, I guess we'll call it here, and have a good rest of your weekend, guys. I'll be on Tuesday. I don't think I have any reason not to be on Tuesday. I think I'll be available. Normal time, 7:30 on Tuesdays. And then
sounds good.
Yeah, we'll see what goes from there. I'm interested. Another week. Some of the stocks that I've been really following, you know, have kind of just been bouncing around. So I'm just kind of waiting for some more news. You know, it's just some of these things you gotta be patient with. You know.
Yeah.
But all right, guys. Have a good one, everybody.
See ya.